Welcome back to the channel. As always, if you copy trading, you're an absolute moron and you deserve to lose all your money. And with that out of the way, we're going to speak today about a stock called ALAB, trading at $182, ticker ALAB. And if you remember our recent video where I pitched the idea short Marvel, this will likely be the long side of a pair trade. So it would be a long to be paired with a short Marvel. And the reason for that is to provide us with maximum return, but also diversification and risk protection within that same sector. So when we look at the semiconductor supercycle, which has been bolstered by AI and having established a permissive macro environment, we look at the semiconductor industry as being defined currently by a single existential crisis. The compute power of GPUs has outpaced the ability of the system to feed them data. This is a physics problem. A GPU transistor can't scale, and that's the bandwidth required to keep these transistors fed with data, and that grows exponentially as AI kicks in. However, the physical copper traces on motherboards cannot handle those speed powers over long distances without signal degradation. So that's where the bottleneck sits. 30K GPU sitting idle for nanoseconds is waiting for data. Um, that's very inefficient, right, in terms of the hyperscalers processing capacity. So that's where Astera Labs kicks in. They manufacture the pipes. So that's things like, for example, active cable modules, switches, retimers, all those things allow data to move at the necessary speeds without corruption. Now, the industry is undergoing a paradigm shift from server-centric to rack-scale architecture. You can see that from the immense capex that is taking place in the United States in this particular sector. So in the past, you bought a server, and now you buy a rack where there are, for example, dozens of GPUs acting as one giant computer. This will be familiar to you if you know that, for example, Amazon, Meta, all those kind of companies are buying GPUs at massive scale. So the implication for the company is that that shift exponentially increases the connectivity tax. You cannot just plug those GPUs together with a passive copper wire. You actually need to have active silicon at every hop. So connecting GPUs inside the rack, that is something that is done by some other products called Scorpio and Arius. They also have the scale out, right? So connecting racks to the network. And that is where they have another product called Taurus. And then you also have the memory, so breaking the memory limit. In there, they have another product called the Leo controller. So when you look at all those products and how they fit into the ecosystem, that makes the company, that puts them into a very strategic position relative to giants like Broadcom and Marvell. So Broadcom, which is one of the competitors that we discussed at Marvell, dominates the core network switching market. However, their focus is on the massive core switches, and Astera focuses on the specialized edge of the connectivity that's inside the rack. They also have a mode there which makes the company very interesting for the medium term, right? They are the first and currently only volume supplier of PCIe Gen 6 retimers. So for example, the NVIDIA Blackwell architecture, which requires that technology, ramps up in the first quarter of the year. And Astera has, at the moment, a monopoly for now. So that's a critical competitive wedge. Broadcom has announced products, but Astera is already shipping them as we speak. So in terms of speed of growth for the top line, when you look at where they sit in the sector, they're very well positioned to capitalize on that fast, right? And potentially increase that revenue growth. And then they have, unlike NVIDIA, they can support open standards. So that makes them the preferred partner for Amazon, Google, and Microsoft, who are building their own custom silicon. And they don't want to be locked into NVIDIA's proprietary networking. So it gives them plenty of interesting uh, um, capabilities. Also, when you look at where they sit into the ecosystem, and with this market cap of 30 billion, makes them a very easy acquisition target for some of these hyperscalers who might want to recognize, right? Might want to benefit from those modes. So now, when we look at what's going to happen in 2026, there's a few things that I believe are going to drive the stock farther. So the analyst consensus forecasts the top hyperscalers would spend over 500 billion in capex in 2026 alone. Um, the mix of this spend is shifting away from pure real estate and power towards silicon infrastructure. And the other is that the Ethernet market is transitioning from 400G to 800G speeds this year. Higher speeds require active electrical cables rather than passive. And Astera's modules are essential for this, driving an automatic average selling price uplift. So when we look at the whole sector, right, the legacy chips like auto and industrial are in a glut. We discussed that at the Marvel idea. But actually, the AI connectivity chips are in a shortage. So that makes Astera the pick and shovel play that wins, regardless of whether NVIDIA or AMD or internal hyperscale chips gain market share, as they all require connectivity. So we're not necessarily trying to pick a winner here in terms of who's going to win this AI race, but we are taking a bet on a high probability of the AI race gaining steam. So in terms of the history of the company, we need to understand the narrative arc presented to the street, right? And then if you look at what happened last year, I think it's pretty critical to understand because there's been very wild moves around this stock over sustained periods of time. So in Q1 2025, Astera was viewed primarily as a retimer company. And they introduced then the concept of intelligent connectivity platform, trying to convince investors that they were not just a commodity chip vendor. That's when they launched the Area 6 smart gearbox to bridge those PCI 5 and 6, showing technological leadership. So I think that's yeah, around this time over here, right? And that was very promising, but yeah, it was this period about here. So skepticism was still taking place, right? And then it came the diversification pivot, which is where we start seeing the stock gaining some momentum. For the first time, their three product lines each contributed about 10% of the revenue. That destroyed the bear case that Astera was a one-trick pony. And the Scorpio switch line became the fastest ramping product in company history. This signaled that Astera could compete in the high-value switching market against Broadcom. So management then quantified the opportunity. Silicon content per AI accelerator expanded to multiple hundreds of dollars. And that leads us to Q3 2025. So by this point, revenue is growing at over 100% year on year, and record operating margins stand at above 40%. So management then pivoted the narrative to AI infrastructure 2.0, right? They announced new products. They announced the validation of the Blackwell upgrade cycle thesis. And they also acquired companies addressing the physical limits of copper for future generations. At that point, Astera is seen as a core infrastructure holding, not a peripheral component trade. So that leaves us to where we are now. Their revenue quality is exceptional due to the software-defined nature of its hardware. Gross margins consistently hovering around 76%, and that is software-like margin profile for a hardware company, quite unique. In terms of operating leverage, the company is exhibiting textbook operating leverage. So revenue is growing significantly faster than OPEX. So, for example, when you look at OPEX in Q2 2025, it was 39%, and by Q3, it hit 41%. So that suggests that as revenue ramps in 2026, the earnings per share will expand non-linearly. So, in terms of what's going to drive the stock forward, it's likely going to be possibly delays in volume shipment from NVIDIA, but also Amazon Web Services and Google ramping up their own chips, benefiting them because those firms rely on open standards when they are needed. In terms of risks, there's customer concentration, of course, that it's not unheard of in a trade in this space. And also any kind of news with tariffs, China export controls, is a sector that is particularly susceptible to these kinds of things. But of course, we are traders, so we build our portfolios in order to account for those things. So it's a risk that we are comfortable taking. Looking at this trade, we can see at the moment that is sitting just above this bearish channel. So this is a confirmation of being waiting to happen. And it has actually gone well above its level at the moment. So that validates the technical aspects for us to enter. I'll be looking for the structure pretty soon to play this out with an options trade, likely on a calendar with an expiry before the earnings day. Hope you enjoyed the video. See you soon.